Back again. We're going to do Module 2. This is now Segment 6. So this is our second module, which is still Introduction to Investment Management. But in Segment 6, we're going to talk about how funds are launched. Okay, so what we're going to do is, well, why do we need to know this? Well, simply because these are the products we're selling. We need to know how they work and the different roles that sort of make a mutual fund, and the different sort of tasks that need to be accomplished. So we're going to cover launching the fund, managing the fund, and then the various elements of the fund, including shareholders, trustees, the investment advisor, the primary underwriter, administrator, transfer agent, custodian, and we're even going to talk about accountants, which not my favorite subject, but hey, we need accountants. Somebody's got to count the money, so we have accountants. All right, let's take a look. So launching a fund. Okay, well, launching the fund is the responsibility of the sponsor. Okay, that is putting forward the fund. Typically, that would be the fund's investment advisor is going to sponsor the fund. But nonetheless, the sponsor is responsible for getting an investment advisor and also getting an administrator to handle the operational elements of the fund, and then the principal underwriter. The principal underwriter is also commonly known as the distributor. Okay, this is a critical function of the fund, probably in terms of actually having a business, the fund advisor and the principal underwriter are probably the two most critical roles. One, we got to have an investment advisor, we got to have a product that's a good product, but then secondly, that doesn't do us any good unless we sell it. So we need to have a principal underwriter or a mechanism to distribute the fund. And then we have a business between having the investment performance and then the distribution to get that out to our investors or our clients. Okay. So what is the sponsor's responsibility? Basically, they get the investment advisor, they put together the officers and directors to oversee the fund. They also recruit the unaffiliated independent directors. Okay, this is a required role that you have people that are not associated with the sponsor on the board of trustees for the fund. And then we register the fund under the various laws, whether it be in various states as well as under compliance with the different Securities Act of 33 and 34. Okay, so again, we have to register it, and then so we've got to comply with the elements of the 33, the 34 Act, and then also the Investment Company Act of 1940. So we've already talked about those acts, and the mutual fund is no different. When the selling of those fund shares, those are considered securities, so we have to comply with those laws just as if we were selling stock in some sort of corporation. Okay, capital requirements. Okay, well, this is a little bit shocking, but when you launch a fund, technically you're only required to have $100,000 in capital. So the sponsor has to put in at least $100,000 of initial capital into the fund to launch it. Now, where that might be the legal requirement to have this seed capital, from a practical matter, that's really not going to work. And so depending on what the fund strategy is, there's going to be different amounts of seed capital. But trust me, more than $100,000. Basically, if it is a more straightforward type of fund in terms of investment process, well then you can probably get away with a slightly lower amount of capital. I'm making up a number, but let's call it in the $10 million range. If I was doing a more complicated or multiple transactions per investment idea, well, then the amount of the capital typically goes up. Also, if I'm dealing with less liquid securities, the amount of capital will typically go up. If I'm dealing with fixed income, which would be in the category of less liquid securities, the amount of capital has to go up considerably because the typical size of fixed income trades tends to be a lot larger than it would be for equity trades. And also the fact that we have this liquidity issue with bonds, we're going to need to make sure that we're starting with enough scale to be able to provide that liquidity while investing. Okay, managing a fund. So first of all, the owner of the fund. Okay, we have the sponsor of the fund that creates the fund, but they're not the owner of the fund. Okay, the owner of the fund is the shareholders, the person who has invested in the fund. Okay, and so they are the owners of the fund. Then you have the board of trustees that looks out for those shareholders and represents their interests. And then we have all these different elements: the investment advisor, the principal underwriter, the administrator, the transfer agent, custodian, and again, our friends, the accountants as well. So let's take a look at each of those different roles. So as we said, shareholders, well, they elect the trustees. Okay, it is their fund. They are the owners of the fund. And then basically they are also vote on material changes in the terms of the fund, the way the fund is managed for its investment objectives, or change in the fundamental investment policies of the fund. Okay, the trustees, as is suggested here, function as watchdogs, and basically they're representing the interests of those shareholders and making sure the fund is operated properly, meaning for the benefit of those shareholders, inconsistent with the agreed upon investment policies and objectives. The Investment Company Act of 1940 also requires, we said yes, independent trustees, but 40% of the board must be independent. So that means not affiliated with the sponsor of the fund. Okay, our investment advisor. Well, we said this is one of the critical functions. Well, the investment advisor is the person that is making the investment decisions. They're the ones who are generating, hopefully, our very favorable returns. These are the people that are also commanding the management fee or percentage of AUM that they get paid for managing those assets. Okay, now fund administrators. Now this varies depending on the fund platform, but some fund platforms may internalize this and do their own administration. Other fund platforms may outsource this and choose not to deal with the administration of the fund. So this is the element of actually operating the fund and dealing with the fees and expenses, processing that, dealing with SEC filings, tax reporting, shareholder reporting, anything that we might have to do to other regulatory bodies, maybe FINRA. So any sort of reporting, any sort of accounting services would be done by the administrator. And again, some firms choose to internalize this function. Other firms choose to hire third-party administrators. Okay, principal underwriters, we already talked about this. This is the critical role of underwriting and distributing the fund, which is our product. So generally, most firms internalize this role, meaning you don't outsource this because you want to control your own distribution. This is your lifeblood. You live or die by AUM, assets under management, and this is your ability to access new investors. So typically, this is a function that would be handled by the fund's sponsor. Okay, custodians. Now, custodians are basically third parties that are holding the fund's assets. Okay, now this has become an industry standard and requirement. Well, one, for retirement assets, it's a legal requirement, but it's been just broadly adopted by the industry as a best practice. And basically what's happening here is that if the portfolio manager says, hey, I've got 1,000 shares of Intel in my fund, well, the auditor has the ability to go to the custodian, an independent third party, and say, hey, the fund advisor says he's got 1,000 shares of Intel. Do you in fact hold those 1,000 shares? and the custodian can then verify and say, yes, I've got those shares. So we know that that the assets of the fund are being accurately reflected, and that the manager's not inflating the assets or saying that they have 2,000 shares when they only have 1,000 shares. Well, it's easy enough to check that and audit that because the assets are actually held by an independent third party. Also, if there should be some problem with the investment advisor and they should run into financial difficulty, well, you can replace that investment advisor with a new advisor, and the assets are still held by that third party, are still intact. Okay, the transfer agent. Well, the transfer agent maintains the records of who are the shareholders. Okay, so who owns the fund? They're also responsible for dispersing the dividends. So any information that we need to know who the holders are in order to determine who we're going to pay the dividends to. Well, the transfer agent handles that. They also mail the account statements, deal with tax issues, and other sort of shareholder notices. Again, if the shareholders need to vote on something, vote for the trustees or vote for changes in investment policy, well, it's the transfer agent that gets that information out to the shareholders, because the transfer agent knows who the shareholders are. Okay, so what did we do? Okay, we learned how a fund is launched, we learned how a fund is managed, and then we talked about the different roles of managing that fund and what those roles are and who needs to do what in terms of the shareholder's role, trustee, investment advisor, primary underwriter, administrator, transfer agent, custodian, and again, our friendly accountants that are doing our annual audit. Again, this is Bob Wozorek. This concludes this module. You have a few questions coming up, and I'll see you on your next module.